Hello and welcome to this Rivemont MicroCap Strategy monthly update for September 2022 from our new office. My name is Matthew Martin and I'm a portfolio manager at Revmont. Before we begin, I must mention that this presentation is for informational purposes only. These are not recommendations or investment advice, and if I talk about companies during the presentation, Revmont may hold positions in these companies and may trade on them at any time without prior notice. So let's start with a snapshot of the Rivemont MicroCap Fund as of the end of September 2022. The fund had 12 million of assets under management, which is similar to the last few months. The annualized return since inception was 6.5%, which was down from last month. Unfortunately, it was a very tough month for the broader market in September. If we look at large cap companies in the US, the S&P 500 was down over 9% for the month. So fortunately for us, the microcap strategy performed fairly well in the context of the overall market. The strategy declined way less than the market, the major indices, and so we're relatively happy. Of course, we're not happy when the fund declines, but we think that from a relative standpoint, it was a fairly good month for us. In terms of portfolio positions, we ended the month at 25. It was up 1 from last month, and I'll tell you more about that shortly. And finally, the concentration in the top 5 holdings was 52%. That's up 1% from the previous month, just because some of the larger holdings perform better than the smaller ones. No additions were made to the top 5 holdings during the month. So we'll start with the investment strategy. First of all, Philip and I attended the MicroCap Leadership Summit virtual conference during the month of September. You may recall that I spoke about it in the last monthly update. It's a 2-day virtual conference. The first day was dedicated to investor presentations. Basically, the MicroCap Club invited 18 of the best microcap stock pickers in the world to present their investment strategy and best investment opportunity at the current price. And I was fortunate to be one of those 18 investors invited to present. So if you'd like to watch the recording of my presentation, it's available on the MicroCap Club YouTube channel. I will put the link in the description down below so you can watch it if you're interested. And for us, in terms of investment opportunities, we were able to see what other people like and also learn more about their strategies. So it was very informative for us, and it helped us to replenish our research pipeline by adding a few very interesting companies that we found at this conference. Then during the month, I also read the annual letters from the Nomad investment partnership. So it's an investment firm that is based, that was based in the UK. It's not active anymore. It was active between 2001 to 2014, and they really generated an outstanding track record during that period. Over 18% annualized return during that time, so very spectacular returns. And basically their strategy was to invest in high quality long-term compounders, so companies that are growing quickly that they could hold for several years. It's not a microcap strategy. They would invest in larger companies, but I think there are a lot of parallels and things to learn from their strategy. And one thing that stood out for me is the quote that is on the screen, which is that it's all too easy to make things more complicated than they need to be, or to invert, it is not easy to maintain discipline. And when I think about our investment strategy, I think it's fairly simple. We look for high quality companies, profitable, with a good balance sheet, a good management team that are growing quickly. So those are not very complicated criteria, but it's not so easy to execute a strategy like that, because it's hard to find high quality companies, especially in microcaps. There aren't a lot of high quality companies, and also it's not easy to execute this strategy because we get pitched a lot of investment ideas during the course of a year, and we really need to work hard to filter and find out which ones are worth our time and worth investing into at the end of the day. So I think that maintaining that discipline to stick to our criteria is quite challenging, and I think it's something we did well over the course of the last few months. If we look at the outperformance of the fund compared to the major indices lately in the last few months, I think it's a testament to the high quality nature of the companies we hold in the portfolio. Finally, we initiated a new position during the month in a company called Good Protein. The company is a vegan superfood company. We actually found this opportunity because two of the co-founders are actually the founders of a company called We Cook, in which we invested in 2019. And as you may recall, we had a nice exit from this investment earlier this year for almost 4 times the capital we invested. And seeing that these people were involved in a new opportunity with the third co-founder, we felt that they could replicate their success again and maybe do even better. So that's why we decided to initiate a small startup position in this company. If you're curious and would like to try the product, I will put a discount code in the description down below. Feel free to try the product for the first time with this promo code. I am personally a client of the company, and I really like the product. That's one of the reasons why we decided to invest in the company. In terms of outlook, I mentioned it before. Our research pipeline is very healthy right now, and especially with the markets being down by a lot this year, valuations are getting more attractive by the day, and so we are doing research on many different interesting opportunities right now, and we hope that maybe a couple of them will make their way to the portfolio eventually. And finally, one of our portfolio holdings announced that it would be acquired by a larger competitor. The company is called CoinSmart. It's a cryptocurrency trading platform. And as you can guess, it's been a very tough market for crypto trading platforms in the last year or so. So the stock didn't perform very well, but I feel like at this point it was trading at a valuation that was way too low for what the company could be worth eventually. And one of their large competitors decided to take advantage of that and just scoop them up at what we think is an unattractive price and terms for current investors. So we're not very happy with the outcome of this investment, but at the same time it highlights how much value there is currently in microcap companies, and some larger players are starting to pay attention to the space and trying to find bargains here. So it's positive and negative. It's positive because we get acquired with a nice premium to the current stock price, but at the same time, if we believe in the long-term prospects of our portfolio companies, we don't want them to be acquired for too cheap. So it will be something to watch out for in the next few months. Finally, just a quick highlight. We held our first Rivemont MicroCap Cocktail event last month. It was a huge success. We had over 50 people, 2 company presentations and 1 keynote speech. I think it was a great event and great turnout all around. And we decided to hold another similar event, this time on November 3rd. We haven't finalized all the details yet, and it's not been announced yet, but if you're interested, you can mark the date on your calendar, and we'll be sure to send you a formal invite in the next few weeks. So that's it for the monthly update for September 2022. Thanks for listening. If you have any comments or questions, please feel free to reach out, and you can also visit the website revmont.ca to find more information about our strategy. Thank you very much, and I'll talk to you next month.